Hey, welcome back. Let me describe a situation that confuses almost every crypto investor at some point. Bitcoin is going up. Your portfolio should be doing great, but your altcoins are barely moving. Maybe they are even going down slightly while Bitcoin pumps. You're frustrated. You feel like you picked the wrong projects. Then, a few weeks later, Bitcoin slows down and suddenly your altcoins explode. They're up 30, 50, even 100% in a matter of days. You did not change anything. The projects did not announce anything significant. They just suddenly took off. What happened? The answer to both of those situations is Bitcoin dominance. Bitcoin dominance is one of the most useful and most underused tools in all of crypto analysis. It tells you where money is flowing inside the crypto market at any given moment. It tells you when to favor Bitcoin and when to favor altcoins. And it gives you a macro perspective on market conditions that most retail investors completely miss. Understanding Bitcoin dominance will not make every trade perfect, but it will stop you from being confused by price action that seems random but actually has a very clear explanation. By the end of this video, you will understand exactly what Bitcoin dominance is, how to read it, what different dominance levels mean, how to use it to make better investment decisions, and the common mistakes investors make by ignoring it. Let us get into it. What is Bitcoin dominance? Bitcoin dominance is a simple but powerful metric. It measures Bitcoin's market capitalization as a percentage of the total cryptocurrency market capitalization. The formula is straightforward. Take Bitcoin's market cap, divide it by the total market cap of all cryptocurrencies combined, multiply by 100. That percentage is Bitcoin dominance. So if the total crypto market is worth $2 trillion and Bitcoin's market cap is $1 trillion, Bitcoin dominance is 50%. Now, here is why this number matters. The total amount of money invested in the entire crypto market shifts constantly between Bitcoin and everything else. When investors are moving money into Bitcoin relative to other cryptocurrencies, dominance rises. When investors are moving money out of Bitcoin and into altcoins, dominance falls. Dominance is essentially a measure of investor preference and risk appetite within the crypto space at any given moment. High and rising dominance tells you that investors are preferring Bitcoin over altcoins. They are consolidating in the safer, more liquid, more established asset. This typically happens when there is uncertainty or fear in the market, when Bitcoin is leading a new move upward and altcoins have not yet caught up, or when capital is first entering the crypto space and flowing into the most widely known asset first. Low and falling dominance tells you that investors are moving capital out of Bitcoin and into altcoins. They are seeking higher percentage returns by taking on more risk. This typically happens after Bitcoin has made significant gains and investors begin rotating profits into smaller projects with more percentage upside potential. Bitcoin dominance is available on TradingView, where you can chart it just like any price chart. The ticker symbol is BTC.T. You can overlay it alongside Bitcoin price and altcoin prices to see the relationships playing out in real time. The historical range of Bitcoin dominance. To use Bitcoin dominance effectively, you need to understand the historical context of what different levels mean. In Bitcoin's early years, when it was essentially the only significant cryptocurrency, dominance was close to 100%. There were very few alternatives, and almost all crypto investment went into Bitcoin by default. As Ethereum launched and grew, as the initial coin offering wave of 2017 created hundreds of new tokens, and as decentralized finance and other sectors expanded the altcoin universe dramatically, Bitcoin dominance gradually declined from its near 100% levels. In the 2017 bull market, Bitcoin dominance dropped to historic lows around 37% as investor capital flooded into thousands of altcoin projects during the peak of that cycle's excitement. In subsequent cycles, dominance has oscillated broadly between roughly 40% at the low end during peak altcoin seasons and around 60 to 70% at the high end during periods when Bitcoin is leading and altcoins are lagging. These ranges give you a practical reference frame. When dominance is in the higher end of its historical range and trending upward, capital is concentrated in Bitcoin and altcoins are relatively underperforming. This signals either a risk-off environment or a Bitcoin-led move that has not yet rotated into altcoins. When dominance is in the lower end of its historical range and trending downward, capital is distributed broadly across the altcoin market. This signals a risk-on environment where investors are comfortable taking on the additional risk of smaller projects. Extreme readings in either direction are often mean reverting. Extremely high dominance often precedes a rotation into altcoins. Extremely low dominance often precedes a flight back to Bitcoin safety. Bitcoin dominance and altcoin seasons. The most practically valuable application of Bitcoin dominance is understanding its relationship to altcoin seasons. Altcoin season is the period during which altcoins broadly outperform Bitcoin on a percentage basis. Individual altcoins can produce extraordinary returns during genuine altcoin seasons, and Bitcoin dominance falling is one of the most reliable early signals that altcoin season conditions are developing. Here is how the typical cycle plays out and what dominance tells you at each stage. Stage 1. Bitcoin dominance is rising. Bitcoin is leading the market upward. New capital flowing into crypto is going into Bitcoin first. Altcoins are either flat or gaining slowly. This is not the time to be aggressively positioned in speculative altcoins. The market is favoring Bitcoin. Stage 2. Bitcoin makes a significant move. Dominance peaks. Bitcoin has run up substantially and early holders are beginning to take profits. Dominance begins turning from up to sideways and then starts declining. This is the earliest signal that rotation conditions are developing. Stage 3. Bitcoin dominance falls consistently. Profit from Bitcoin gains is rotating into altcoins. Capital that entered the market through Bitcoin is now spreading across the broader crypto ecosystem. Altcoins begin outperforming Bitcoin meaningfully. This is altcoin season, and falling dominance is your confirmation signal. Stage 4. Bitcoin dominance reaches its cycle low. The altcoin market is at peak excitement. Nearly everyone is talking about small projects with extraordinary gains. This extreme low in dominance often signals that the rotation has gone far and a reversal back toward Bitcoin may be approaching. Stage 5. Something shifts. Bitcoin dominance begins rising sharply again. Either Bitcoin makes a powerful new move that pulls attention back, or risk-off conditions cause capital to flee altcoins back into the relative safety of Bitcoin. Altcoin gains evaporate quickly. Understanding these stages through the lens of dominance gives you a macro framework for when to favor Bitcoin and when to favor altcoins. How to use Bitcoin dominance in your investment decisions. Now let us translate this understanding into practical investment decision making. Decision Framework 1. Portfolio allocation based on dominance direction. When Bitcoin dominance is rising, increasing your Bitcoin allocation relative to altcoins aligns your portfolio with the direction of capital flow. You are holding the asset that the market is currently favoring. This reduces the frustration of watching your altcoins underperform and positions you in the asset with the clearest momentum. When Bitcoin dominance is falling consistently and showing clear downward trend structure on the chart, gradually increasing your altcoin exposure captures the rotation move. You are positioning in the assets that are beginning to attract the capital flowing out of Bitcoin. Decision Framework 2. Timing new altcoin positions. Before entering any new altcoin position, check Bitcoin dominance direction. Entering a new altcoin position while dominance is strongly rising is fighting the macro current. Even a genuinely good altcoin project will often underperform or decline during a rising dominance environment. Waiting for dominance to begin turning and showing early signs of downward momentum before entering new altcoin positions dramatically improves the timing of your entries. You are entering when the macro wind is starting to blow in your direction rather than against you. Decision Framework 3: Risk Management Signals. When Bitcoin dominance begins rising sharply after a period of falling, it is often a signal of risk off conditions developing. This is a trigger to review altcoin positions and consider tightening stops or reducing exposure. The sharp rise in dominance tells you that money is moving to safety and altcoins may be about to face significant selling pressure. Decision Framework 4: Combining dominance with Bitcoin price direction. The most powerful combination is dominance direction combined with Bitcoin price direction. Rising Bitcoin price with rising dominance means Bitcoin is leading strongly and altcoins are lagging. Rising Bitcoin price with falling dominance means rotation into altcoins is underway. Falling Bitcoin price with rising dominance means risk-off conditions where almost everything is declining, but altcoins are declining faster than Bitcoin. Common mistakes investors make with Bitcoin dominance. Understanding Bitcoin dominance also means understanding how not to misuse it. Mistake 1: Treating dominance as a precise timing signal. Bitcoin dominance is a macro indicator. It tells you the direction of capital flow tendencies, but it does not tell you exactly when altcoin season will start or when it will end. Investors who try to use dominance as a precise entry and exit signal will be disappointed. Use it as directional context, not as a precise trigger. Mistake 2: Ignoring dominance because a specific altcoin has strong fundamentals. Even the best altcoin projects with genuinely strong technology, credible teams, and growing adoption will often struggle to gain during a period of strongly rising Bitcoin dominance. The macro capital flow affects almost everything. Understanding dominance tells you whether the market conditions are favorable for your altcoin investment, regardless of the project's individual merits. Mistake 3: Assuming falling dominance always means immediate altcoin gains. Sometimes Bitcoin dominance falls not because capital is rotating into altcoins, but because the broader market is declining and altcoins are falling slightly less than Bitcoin in a particular period. Distinguishing between falling dominance in a rising market versus falling dominance in a declining market requires looking at the absolute price levels of both Bitcoin and the total market cap together. Mistake 4: Using dominance in complete isolation. Bitcoin dominance is one tool among many. It works best when combined with Bitcoin price structure, market cycle analysis, on-chain data, and overall market sentiment. No single metric tells the complete story of the crypto market. Let me bring everything together. Bitcoin dominance measures Bitcoin's market cap as a percentage of total crypto market cap. It tells you where money is flowing inside the crypto market at any given time. High and rising dominance means capital is concentrating in Bitcoin. Bitcoin is favored over altcoins. New market entrants are going to Bitcoin first. Altcoins tend to underperform in this environment. Low and falling dominance means capital is rotating into altcoins. Profit from Bitcoin gains is spreading across the broader market. Altcoin season conditions are developing. The historical range of dominance broadly runs from around 40% at altcoin season peaks to 60 to 70% at Bitcoin dominated phases. Extreme readings in either direction often precede a reversal. Use dominance direction to guide portfolio allocation. Favor Bitcoin when dominance is rising. Increase altcoin exposure when dominance is falling consistently. Use sharp dominance increases as a risk management signal for altcoin positions. Avoid the common mistakes of treating it as a precise timer, ignoring it because you like a specific project, misreading falling dominance in declining markets, or using it in complete isolation from other indicators. Here is the final insight I want to leave you with. Most retail crypto investors look at individual projects and wonder why they are not performing as expected. The missing layer of analysis is almost always the macro picture. Bitcoin dominance is that macro picture. It explains why your altcoins are not moving when Bitcoin is pumping. It tells you when rotation conditions are forming before you can feel them in individual prices. And it gives you a framework for making portfolio decisions that are aligned with where the money is actually flowing. Add Bitcoin dominance to your regular analysis routine. Check it alongside Bitcoin price every time you assess the market. It will quickly become one of the most valuable perspectives you have. If this video gave you a clear and practical understanding of Bitcoin dominance, please hit the like button and subscribe. Share this with one crypto investor you know who keeps wondering why their altcoins are not performing. This is likely the explanation they have been missing. Drop a comment below and tell me this. Before watching this video, were you already tracking Bitcoin dominance? And if so, how were you using it? I read every comment and I want to know where you are starting from. I will see you in the next one.